If you are buying a home in Surrey, Langley, or anywhere in BC, and if you don't fully understand mortgage penalties, strata risk, and subject removal, you could end up losing $50 to $100,000 without even realizing it. And it won't be because of the listing price. Most buyer thinks the price is where the mistakes happens, but it's not. The real financial leaks happens in financing term, offer structure, strata decision, or closing details most people rush through. In this video, I will break down the exact framework that I use with my clients to save their time, money, and peace of mind. Stay with me until the end of the video, and I will share one money saving tip most buyers never hear about even after they have bought. Hi, I'm Chandan, a real estate agent from City Fair. I help buyers and sellers make smart, informed decisions in Surrey and Langley. On this channel, I break down everything you need to know about buying and selling real estate so you don't overpay, overcommit, or regret it later. So here is the framework I teach every client. 6 pillars to buy smart in British Columbia. Number 1, identify your needs. Number 2, pick your realtor. Number 3, get pre-approved and finance safely. Number 4, search strategically. Number 5, structure your offer like a pro. And last, close cleanly and confidently. Let's talk about number 1, identifying your need. This is a very important step. This is where some buyers enjoy the process while others get frustrated. And let me explain why is that. Most buyers I work with don't actually know what they really want until I make them sit down and write it down on a piece of paper. They know what they like on Instagram, what they think they can afford, what their cousin, their banker or friend told them, but there is a better way to find out your needs. And here are 5 things that will really help you identifying your needs. Number 1, life first, property second. I never start with what you are looking for. I start with asking, walk me through your life, your weekdays, weekend, and where you will be in the next 3 to 5 years. Where do you work? Is it hybrid? And what is your commute tolerance? Who lives with you right now and who would be living with you in the next 3 to 5 years, like any kids planned, parents moving in, and how important is the outdoor space to you, and what stresses you out most in your current place. These questions help discover your true needs and help you get clarity and make an informed decision. I have seen pre-approved qualified buyers who are ready to buy search for a property for 6 months to a year, and they see so many houses that they get confused, and this is mostly because they are not clear about their needs. This results in missed opportunities all the time, or even worse, they end up buying a house that they regret later. So take your time to figure these things out. Second, separate needs versus want, non-negotiable or true needs. This is number of bedroom, number of bathroom, maximum monthly payment, school catchment, commute time, elevator if you are a senior person. Ask yourself which one are the real deal makers for you. Strong wants, important but flexible, such as updated kitchen, parking, storage, lot size, newer building, open concept. Ask yourself which one are the ones that you can compromise with if other criteria are met. And last, nice to have or emotional preferences like direction, fireplace, walk-in closet, view, quartz countertop. Third, budget reality check. Many buyers confuse what I'm approved for with what I can live with. Let's say you are living in an apartment currently that costs you $3,000 in monthly rents, and your bank approves you for a mortgage of $5,000 per month. Now, that doesn't mean you should go ahead and buy an apartment that costs you $5,000 per month, because that's a $2,000 monthly stretch, and annually that would be $24,000. So your current lifestyle is based on the money allocated to your different needs. Coming up with an additional $2,000 per month might be doable initially, but it will add a lot of stress on you later. So you might want to ask yourself what other things you have to give up on. Like, do you have to cut your travel plan? Will you still be able to meet your savings or other life goal? And mind you, we have not even accounted the property tax, strata fees, maintenance, etc., all other expenses that you will have apart from the mortgage monthly payment.
And also, if the interest rates goes up by 1%, what will be your situation? Will your current lifestyle still work? These are just a few questions or things to consider. Area education. How familiar are you with the area you want to buy in? And by area, I mean location, neighborhood, geography, community, shopping malls, resale value, future development plans, rental potential, even if you don't want to rent. Most buyers think that they are familiar with the area, but they are really familiar with the landmarks. So you need to go beyond that and really understand the area where you are trying to or planning to buy. Number five, future proof decision. What you are buying today will stay with you until you sell it. So you need to look beyond today's market. And do you know in BC, on an average, people sell their house in every 4 to 6 years? And for condos and townhouse, that would be even shorter, about 2 to 4 years. So consider asking yourself, can this house be sold easily for top dollar in the next 3 to 5 years? If your family grows, is it still practical to live in the house? Will Strata rules restrict resale? Remember, your first home doesn't have to be your forever home, but it must be a smart one. Second step, pick your realtor. The next step would be picking the right realtor. Always remember, you are not just choosing a person to show homes, you are choosing a strategist, a negotiator, and a risk manager. The right realtor can save you money, time, and stress, and the wrong one can cost you all three. And here's the most important thing about this in British Columbia. The buyers does not have to pay any commission to their agent. It's the seller who pays the commission to both the seller's agent and the buyer's agent. And while the seller pays the commission, the buyer pays for the property transfer tax and GST if applicable, which is in most cases if you are buying a new house that has been never lived in. In BC, buyers and sellers have their own separate real estate agent. A real estate agent owes fiduciary duties to their client. Fiduciary duties means the agent must look out for what's best in their client's interest, even if it's not in the best interest of the agent, as well as the duty of loyalty. In real estate, an agent gets paid based on the property price, which means the higher the property price, the higher the commission. So if you shortlist two houses, one of them is listed for $1 million, the other one is listed for $850,000. And if I, as your real estate agent, understand that the $850,000 house is a better choice as per your need that you have communicated to me, I should advise you to buy that one and not the 1 billion house, even if I get a lower commission. That is what looking out for your best interest, even if it's not in the best interest of the agent. I always recommend interviewing at least 2 to 3 agents to see what they have to offer and what are your options. And then based on that, you can decide what is a good fit for you. Your agent should give and explain you the DoRT form, which is disclosure of representation in trading services. It is a mandatory form that needs to be filled ideally before you start working with the realtor and go on property search. This is not a contract. This form explains the consumer and real estate agent relationship. What qualities to look for in an agent? This totally depends on you. However, I will give you some qualities that you should really look for in a good real estate agent. Process and communication. The reason I have process and communication at the top of my list is buying real estate is a stressful process with many complications. There are many complicated steps along the process with legal and financial consequences. So if your agent is an effective communicator, your life will be much, much easier and the process will be less painful. Clear, open, and timely communication builds trust and transparency. Next, commitment. And this is a big one for me. Is your realtor with you throughout the process, or do they sometimes make you visit properties on your own? I see so many people every month during my open houses by themselves, and your realtors get paid to provide you quality services. So they are supposed to help you and guide you and make it easy for you to make a decision. So if they are not giving you enough time and you have to go and find the houses and look at the properties on your own, you might want to hire someone who does that for you. Next is negotiation. This is also very important. This is where you save money, win a bidding war, and buying the property at the right price. Your realtor should be able to demonstrate you how they have added value for their client by their negotiation skills. And when it comes to the pricing and bidding war, you need the best negotiator on your side. In real estate, the negotiation is not always about the price. It also includes many terms and conditions, which we will cover later in the closing stage. Next is competitive. Work with a realtor who is competitive. It goes without saying that you get what you pay for. So that applies very much in real estate agent. A good agent costs you less in the long run, and during the process, they usually create as much value as they get paid for. Last, trust. Every relation in life depends on trust. So find a realtor you can trust. And remember, a realtor's is real value isn't in finding homes, it is in protecting your money, your time, and your peace of mind. If you want to hire me as your agent, feel free to book a no obligation consultation by calling the number below. Step 3, get pre-approved and financed safely. I advise my clients to get approved safely so your lifestyle and future is not stressed. That means figuring out the difference between what you can afford to purchase and what you are comfortable to purchase without compromising your lifestyle. You do not want to purchase a home and then eat mac and cheese for the rest of your life. In pre-approval, a lender usually reviews your income, debt, down payment, credit history, and based on that, they suggest you a borrowing range and what the interest would look like for you. And sometimes they also give you an interest rate hold for the next 90 to 120 days. A pre-approval is not a guarantee or a final approval because the actual mortgage and interest rate will depend on when you go to the lender once you have finalized a property before or after putting an offer. Now, you might be thinking why I'm asking you to get pre-approved even before you have finalized a property. This is because it gives you a very clear idea of what you can realistically purchase based on your credit profile and income. You do not want to spend weeks and say 50 house to finalize one and then find out its purchase price is over what the bank is willing to approve you for. Also, in a negotiation, a pre-approved buyer is a qualified buyer, and sometimes that can give you an edge against those who are not qualified. So here are the 6 important things about getting pre-approved and financing. Number 1, choose the right bank or broker. We have 5 major banks. All banks have their in-house mortgage specialist that can help you with the process. So you can go to any bank you want, but ideally I would suggest you should go to your bank first because they have all your history, your income comes and goes through them, and it would be less paperwork. Also, it can be fast and easy approval process. So you sometimes even get better interest rate than other bank. Mortgage broker. This is important. At least try one mortgage broker, even if you love your bank. These mortgage brokers have TD and Scotia plus 20 to 30 other lenders. So a mortgage broker is usually more flexible to work with you than bank because they get paid once you have taken the mortgage or once the mortgage is finally approved. So they are more motivated to work with you and they are willing to go the extra mile if needed. And sometimes they can get you a better interest rate than the bank. Second, documents required. You usually need a photo ID, last 3 months pay stub, last 2 years notice of assessment, and last 2 years T4 and employment letter. If you are self-employed, then you would also need last 2 years T1 and your business financials. Third, down payment. If the purchase price is less than $500,000, then you need to put 5% as a down payment. If the purchase price is between $500,000 to $1 million, then you need to put 10% down payment. And if the purchase price is over $1 million, then you need to put minimum 20% down payment. Fourth, interest rate. And here comes the biggest question that comes every time when we talk about interest rate. Should I choose a variable interest rate or a flexible interest rate? Variable, as the name suggests, changes as per Bank of Canada's key policy rate. In a normal economic cycle, it is very stable. Like if I talk about before 2021, it was at a near zero level or at 0.25%, which was very good. But now you know what the condition is. So it heavily depends on economic factors such as inflation, deflation, or recession. So when Bank of Canada hikes their key policy rate, your mortgage interest rate, if it's a variable interest rate, it will go up, and that means your mortgage payment will remain the same for most bank. I think, apart from Scotia. But your amortization period goes up drastically, which means every month you would be paying more interest on your mortgage. However, with variable interest rate, the penalties are considerably lower if you want to break them because you need to sell the house before the mortgage term ends. Fixed rate. In fixed rate, you can have a mortgage term for 3 to 5 years. Usually 5 years is the most common one. So when you choose a 5-year mortgage rate, during that time, regardless of what happens in the economy, your mortgage payment will remain the same every month until the end of the mortgage term. So if you prefer peace of mind and have no plan to sell the house before the mortgage term expire, you can go with the fixed interest rate. However, if you need to break them up early because you want to sell the house, the penalties are very huge. They are considerably higher than variable. So you should consider how long you are planning to keep the property. If you are planning to sell the property before 5 years or before your mortgage term end, you might want to consider variable interest rate. But again, consult with your bank or your mortgage broker. Last, mortgage insurance. We have CMHC, Canada Mortgage and Housing Corporation, that insure all the mortgage if the down payment is under 20%. And this insurance gets added to the monthly mortgage payment and is payable until the total mortgage payment reaches 20%. Step 4, search strategically. If you can take one advice from this video, it will be this. The goal of property search is not to see everything. It is to eliminate bad options quickly and focus on the right ones. Have you ever been in a situation when you went shopping and ended up seeing a lot of options? There is usually 3 things that happen in that case. Number 1, you end up frustrated and not buying anything. Number 2, you end up buying something that you really didn't like or regretted later. Number 3, overpaying for something that you like. Property search is where you need all the expertise from your realtor. On an average, my buyer sees a maximum of 5 to 8 properties because of the effective process I follow with them, which is called the funnel process. Finding the right property could be a long, challenging and time-taking process. So why do it yourself when you are going to hire an agent anyway? It's like doing half of your agent's work. So sit with your realtor, identify and clearly communicate your needs, and let your realtor handle the search process. You can still find properties online and send them to your realtor to see if they matches your criteria. So here are the steps you would likely take in the property search. 1, online search. There are many sites there that you can use. However, the most common ones are Realtor.ca and Zillow, but I would recommend using Realtor.ca. I like it. I use it mostly, and it has every listing available on the market. So you can go to the website, click on find house, and then you can do a map search. You can also search by property address, and there are tons of filters that you can use to filter out properties and look only the ones that you want to buy or that matches your criteria. These filters include type of properties, number of bed, number of bathroom, square footage, price, land size, etc., etc. It also gives you a mortgage calculator where you can plug and play different interest rate and different down payments to see what your monthly mortgage payment would be. It also have neighborhood statistics like average family income and population. You can also find out upcoming open houses that you can visit. Second, open houses. Open houses you can find out from Realtor.ca and check out the house. They are usually scheduled on Saturday and Sunday from 2 to 4, but sometimes they are also scheduled on weekdays and even on weekend from 12 to 2 or at other time. So check for the timing and plan accordingly. Next, private showing. Private showing is when you select some properties and then your realtor book appointment for you to go and see them privately. It's different from open house where you can see multiple groups or people coming to see the house. In private showing, it's just you and your realtor, so you can take your time to see the property and ask any question about the house, and your realtor can give you any advice about the property if they have. However, in this stage, I constantly remind my clients that do not get emotional, because at this stage you are just evaluating properties. And most importantly, don't chase perfection, because you will never find it. Choose the best option, not the perfect one.
And now comes the most expensive part of the process, your offer structure. This is where most buyers lose serious money, and I will break this down in the next video.
This is why I make these videos, not to sell you a house, but to make sure you don't overpay, overcommit, or regret the biggest purchase of your life. If this video saved you even one mistake, hit the like button so YouTube knows that this kind of content matters. Subscribe if you want real estate explained without hype, pressure, or nonsense. If you are buying anywhere in Surrey or Langley and want a strategy and not just the showings, my contact details are here. Call me to book a free, no obligation consultation. And just a quick note before you leave, this video is for general education only. Everyone's situation is different, so always get advice from the right professional before making any real estate or financial decision.